Hi, and welcome again to another edition of Market Analysis for today, February 7th, 2024. I'm Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. All right, so yesterday we did see at the end a red day for the Nasdaq. Initially, it did fluctuate to the upside. Today, we are basically doing in range of yesterday's range. So we are in an implied open to the upside. So 17,800 still the target. For the S&P 500, 5,000 is the target. So let's see if that will be reached today. For the Dow, I'm looking initially for 38,700 to be my target. Initially 38,800. That's where I have my resistance. But initially, yes, that number. And then we have crude oil that early today, it did fluctuate above 74. It's quickly it had retreated from there. It could be just profit taking, and then making another, looking for more participants to take the price of crude oil above 74.5 towards the $75 marker. Then we have Nat Gas that after a few days of red, it has found some footing for now. 210 could have been that place, but I moved my support to $2, round number, psychological number. Today we could probably see some fluctuation into the half of yesterday's session, and then just retreat again back lower down. All right, so gold. Gold has a particular I like to look for particular candle patterns, and it has this one called the piercing candle pattern, which means that it's a bullish candlestick pattern that forms after an extended bearish trend. Okay, when you say extended bearish trend, well, we have, because we've been selling off after obviously that 2100, but from 2100, let's say for example, we've been selling off and just selling off and selling off. So this candle right here is the piercing candle, which it means that it can be used as an indicator to predict the resumption of the uptrend, as it shows market indecision at support levels, which then reverses as bull overpower bears to push price higher again. So the whole scenario behind that is that it has to pierce 50% of the previous day, and it's done that. So now we want to be able to confirm that, or find or use another tool that can help us determine the path of the market. Let's begin by using this low, okay, of number 13, and see how many candles we can bring. Let's just use the low of this one. So we're just gonna use this one and that one, and then we're gonna use this one, this point, so that we can cross this wick, which is a very long extended wick. So we want to find some common ground. So we say that's the middle of it. That's an intersection of it. All right. And so into what we see of the chart, there's a tool that is called Elliott Triangle Wave, and what this tool uses or does, it represents, it tries to give us the accounting of the Elliott wave theory, which it says that we typically have 5 ways of performance, of upward movement, and then 3 waves of correction. So we want to be able to look at where the market, before we draw in these lines, where did the market begin its rally? So we can say it began here, but so previously from here, we want to find a common ground, or something that would show us that the market, the previous move ended. So it could be around here, and here's where we begin using our tool. So from here, this is 0 point. We're gonna come down to our first intersection, that'll be A. Then we're gonna come to our second intersection, that'll be B. Then we're gonna come down to our next low, which it will be C. And then we're gonna come up to our next intersection, will be D. And then we're gonna come out all the way across. We could come here, but we want to come to our intersection. It will be right here. So this meaning that if this would have been here for some reason or higher, then it wouldn't be directing us to a market moving higher. And so this particular scenario shows us how the market is is contracting, right? And this is the trend that is a bear market. It was trending lower, it was contracting. So now the market is going to explode. It's going to break out, and that should be to the upside. Okay. So how much up to the upside? We could probably come and revisit at least that high. Okay. Or D or B. Okay. So going long with gold. Let's erase this real quick. No, I don't want to trade. All right. So that's for gold. All right. That's gold. That's gold for us. Okay. There you go. Let's go into silver. All right. So silver is trading lower, looking for something more to sustain its movement from the down, continue moving down. So 2220 could be that place, which it was really, but I think it's going to continue to trend lower. So $22 will be that place. Then we have copper that it has doing a doji. So could this be that moment where copper will just pop to the upside? Well, let's see. 380 is a resistance, and then we have Bitcoin that has been trading sideways, creating a very narrow channel. And then we have the currencies that are looking to stay north of 107 for the 175 for the euro. Let's see if we can reach 108. And then for the pound, looking to stay north of 125.80. Let's see if we reach 127-ish for today, as the dollar index has been retreating. Okay, so let's see if it does make a move to the downside and reaches 103.5. We will see a uptick in gold precisely and the currencies. That's it for me today. I wish you a fantastic trading day, and I'll see you tomorrow.